All right, good morning, Trade Pros. Sound check 1, 2. Welcome to our morning market update for this beautiful Thursday, the 23rd of April. Hope you guys are having a great day so far. I certainly am, and a great morning. And let's talk about a few things. So first and foremost, world's largest oil companies have paid a safe stream of dividends to investors for a long period of time. Right, but with crude oil prices doing what they have lately, that's in question. Norway's Equinor said they're going to reduce cash dividends for the first quarter of 2020 by 67% to just 9 cents. All right, which is a pretty historic thing to do, but it's a pretty historic market. All right, most oil majors have already slashed their investments and cut back their buybacks, but have not reduced dividends to a large extent. All right, companies like Royal Dutch Shell, RDS.A and RDS.B on the exchange, BP, symbol BP, ExxonMobil, XOM, Chevron, CVX, Total, TOT, and ConocoPhillips, COP. There are some labels to watch for some announcements potentially. This is starting to impact companies' profitability in the energy sector for sure. All right, thought I'd mention that dividends are getting slashed. This morning we were on the lookout for a really important number that happens weekly. That's initial claims or unemployment claims. What that means is how many people have filed for unemployment claims in total, and then the initial one is that's important because the initial means this is their first week filing it, whereas continuing claims is basically people who have received it or filed it before that are receiving it for a second or a subsequent period, plus the people who are first time. Okay, but the important part is the first time. That's what we call initial jobless claims. So on that number, it's 4.427 million jobs came out. It's higher than the 4.2 expected. Okay, it is lower, much lower than the previous of 5.2 million. And I think the fact that the actual number is lower than the prior week, suggests the market's taking this a little more bullishly because it is up after that 830, 2794 or so level. That's where we were right before initial claims. Okay, so it took a while. We consolidated a little bit, but we did push prices higher. Okay, jobless claims on a 4-week average are 5.7 million. That's a whopping number. All right, and continued jobless claims are now 15.96 million. Here's a shocking stat. There's 565 people in America or Americans that have lost their job for every one confirmed COVID-19 case. I think that's an absolutely shocking division. Okay, 565 people have lost jobs for one COVID case. There's a lot of information circulating. I would urge you guys to do the research on. But I really like our YouTube channel, and I really can't. Yeah, I'll just leave it there. Interesting stuff is starting to surface, and you can't help but just read it and wonder. I always tell you this: never believe any single narrative. You got to have thoughts of your own. The only thoughts that matter are the ones that you think and generate. But give some weight to some of these theories and different ideas and concepts, and think about it for yourself. Don't just be fed information. That's the worst thing. Okay, that's especially for trading. It's a trading channel, so it's keeping trader related. You don't want to just be fed information. You want to think for yourself. That's why we don't provide signals. It's the most ridiculous thing you could look for in this industry. Okay, here's another shocking stat. The 4-week total of job losses is 26.5 million. All right, which is over 10 times the worst 5-week period in the last 50 plus years. Get this, just about 22 and a half jobs created since 2010 in the economy, in the US specifically, and 26 lost in the last 5 weeks, right? You've lost a decade in 5 weeks of jobs. Jobs are important to the economy. And that's not specific to the US. It's just we happen to trade US markets because they're liquid. But if you look around the world, and we will in a moment, you'll notice that there's some signs of trouble abroad as well. All right, some key earnings from yesterday. Delta Airlines down 2.7%, trying to raise $3 billion in debt. Going to be hard in this environment. Discover Financial is down 6%. What else is important? Really. CSX up 2.1%, but not really as important. Alcoa is up 3.8%. They beat revenue estimates, and AT&T was down 1.3%. They kept their dividend for now, but pulled guidance. All right, so today's markets in Asia, Japan's up 1.5%. Hong Kong's up 0.4. China's flat. India's up 1.5. In Europe at midday, London, Paris, and Frankfurt more or less are flat. Paris leads the way, actually, 0.5%. And in the U.S., Dow Jones is flat, S&P's flat, Nasdaq's flat, although they're posting gains after the latest initial jobless claims. Okay, crude oil is up huge this morning, 15%, 15.85. Looking at the front month, I know a lot of traders have went further down the curve, trading July, August, heck, some might even want to trade September, but it is still a contango market. It's just the flat end or the short end of the curve is seeing the most amount of volatility, and brokers are sending a lot of emails to their clients saying margins going up. And one way brokers could stop you from trading is raising the margin. Right? They won't say you no trading crude oil, but if they make $40,000 margin be the amount for crude oil, you know, some people don't want to put that margin capital down. They either don't have it or now they rethink the trade. And so it's not ironic or it's not coincidental the crude pops when margins increase. Okay, because there's no more people looking to short it on the speculation side. And you know, lack of sellers. Lately, it's been a selling market. A lot of oversupply just hitting the book, a lot of selling. And so if you raise the margins, some speculators can't get in on the short, less sellers. A few buy stops come in on crude. I don't think this is the end of it, though. All right, gold prices charting to as high as 1757.90 overnight. Now they're off those highs back to the 44s. Bitcoin's up 2%. All right, and here's the important information overnight. Overnight, Europe had some really deadly PMI data, like really bad. So this is flash PMI. Flash means, I mean, I have nothing but bad analogies for this term, but if somebody was to flash you, I'll go there, I'm sorry, but you know what, they give you a quick glimpse at something. Same idea with German flash manufacturing, anything flash PMIs. It's an early look at an index, and this index actually is served of people in the manufacturing industry and the services industry. Okay, so knowing that it's an early look, this is why it's important to the market. All right, at 3:30 in the morning, German data came out, absolutely atrocious. The composite flash number was 17.7 versus 35. Okay, market services 15.9 versus 31. Manufacturing 34.4 versus 45.4. It doesn't sound shocking until you realize that anything under 50 is economic contraction. Anything above 50 is economic expansion. And so that's sort of the sentiment, and it's a forward-looking indicator. All right. In the European Union as a whole, even worse, 13.5 on the flash PMI, and manufacturing 33.6 versus 44. That's a huge miss. In the UK, 12.3 versus 34.5, and manufacturing numbers 32.9 versus 47.8. Misses across the board. Here's an interesting statistic or interesting fact. In about 40 minutes time, 35 minutes time, we're going to see the number for the US PMI composite flash, and you can see manufacturing services for the month of April so far. And you know, this is going to move the market. This is a huge number. So be careful today. At 9:45, you're going to have some work to do. Then 10 a.m., we have new home sales. 10:30, we have natural gas. 11, Kansas City Fed manufacturing survey, and then money supply and the Fed balance sheet, including some earnings after the bell that I didn't really care too much to find out about. I probably should have. All right, that's what we got, guys. So markets are rallying, but you know, don't confuse yourself. There is still some carnage going on in the economy, but I'll tell you this, and this makes sense. How many people are wondering right now, why the hell are the markets going up as all this bad data is coming out? Just be honest, you know, because I know that I'd be wondering this if I didn't already know, because I traded through 08 and 09. Okay, nobody wonders in YouTube. Bye, guys. I love you. Have a great rest of your day. I'll see you tomorrow morning. Manage your risk. TRADEPRO. Take care and have a great day.